right now, the overall market trend on this pound USD on the daily is a bullish trend. Okay. Now I'm not going to trade daily because I don't trade daily. I don't have time to wait for 1 week to make profit. I'll zoom it and look at the candlestick, the current candlestick and the previous candlestick. So now, what are we seeing? We're seeing like liquidity is here. Because this is a supply zone. When market fell from the bullish, when market created a high, right? So market created a high, drop, reach this what's this thing called again? The demand zone, the change of character that happened here, that pushed it up to take out this high and created a new high. So the price came down, tap on this change of character, pull back up, look at an order block here. If you can call this an order block, continuous order block, you see? Now it tapped to this order block and then broke structure here. You understand? Now you broke structure, made a strong low, made a low. I've told you to go about strong low and strong high. So it made a low, okay? And then market moved back up to this supply zone, the first supply zone after the high. Now, what I'm now doing on my daily, after understanding all of this, is to look at my current candlestick. Where is it at? I understand that it is at this supply zone. Good. I'll not drop to the 4 hours candlestick. Sorry, another thing I forgot. On this daily, I know that the market is at the supply zone. Then I'll not ask myself, since it is in the supply zone, that means it is going to test a demand zone before it can take out the supply zone again. Because the market will take liquidity, retest, and then try to test that liquidity again. The one that forced to the liquidity, just like market took a high, retest, and try to take that high again. Do you understand? So now it is in this supply zone. What I want to do is to look at where is the next demand zone, where is the sell before the buy. Do you get me? So I'm not seeing the sell before the buy here because when market started going up, when the price started going up, it sold, and then bought because it has to, it sell, tap on this fair value gap here, and then pull back up. As you can see right here, to make this thing understandable for you. As you can see right here now, when the price created this imbalance candlestick, the next one was a bearish candlestick, which made it to be a fair value gap. Now price went back again, price didn't come down again, but it went up, took out this high, this first bearish candlestick, took the high, came down again. Do you understand what I'm saying? Market will take the high, comes down again, and tap into this imbalance candlestick, this fair value gap, right? You now understand that the body of the candlestick that tapped into this fair value gap closed inside the previous candle, telling that it doesn't have any business again in this fair value gap because it tapped to it. Then the next candlestick was a bullish strong candlestick. Understand? Now we now make here is now our demand zone because it is a sell before the buy. Here is now our demand zone. Okay, here is now our demand zone. So I'm expecting price to come down this zone, either to test this fair value gap again to balance it and keep going to continue to take this supply zone that is here, take it out. That is what I'm trying to make you understand. This daily time frame is just for me to understand what my current candlestick, where am I in this current candlestick, this bearish candlestick right here, where am I? Looking at the time, I'm still at 9 hours remaining, so there's still much time. I'll now go down to the 4 hours time frame. This is my demand zone, the demand zone I'm talking about. Now on the 4 hours time frame, there is a price created a high in that supply zone, came down, tapped into this demand zone because there's a sell before the buy, tapped into this demand zone, pull back up, fill the gap that is there because there's gap here. Price fill gap here, okay? When it created the high at that supply zone, it fell and tapped into this fair value gap here inside this demand zone, this sell before the buy. We want a block structure, if you can call it a block structure. It came back down here to tap to it, okay? Pull back up, fill this imbalance candlestick here, this fair value gap. You can see that is what is holding on to price. Price started coming down again. Now my take profit supposed to be at this demand zone that I marked out on the daily, but I don't have that time. I need to make money today and not tomorrow. Do you get me? Then I'll now look at the 4 hours I've told me where the market is going. It's going to be bearish because it will take out this low here because it's not a strong low. It's just a liquidity low. So if you take the liquidity low, when the market takes a liquidity, it will go and retest, right? And then start falling, right? Let it take the liquidity first and let me take my profit. Do you understand? Then when it takes that liquidity, I am now out of the market. Now I'll not be watching what else will happen. Will it maybe create a fair value gap or an imbalance so that when it comes there to retest it, I can be looking for another short entry so that price will come down to this demand zone right here that I'll mark out my daily. Do you understand? So I'll be looking for what's happened after you took this liquidity. That's what I'll be thinking maybe tomorrow or later in the night. Do you understand? So on the 4 hours, it's telling me bearish momentum is summing up. I'll go down to the 30 minutes, like I said before. I once explained this to you on a Sunday morning when I was trading BTC, doing our video call. I explained it to you, but I think doing it every time you'll be understanding it small. So now 30 minutes candlestick, 30 minutes time frame is now giving me a clear picture how the market is when it created the high, broke structure here. When it created the high, check liquidity. This week here is the liquidity. Market took the liquidity strongly, pull back up, didn't feel this imbalance, and then strongly broke another structure here. Okay, now change character. See how market change character. Broke structure, change the character, broke structure, and keep going up. Feel this imbalance candlestick here. Market filled it, the price filled it, because price has to feel imbalance. Every imbalance in the candlestick in the chart is going to feel it. Price filled it and then fall, change character again, and started changing, and started going bearish. So we have liquidity here, all these things here. And liquidity. Okay, when market was going up, to make you understand liquidity, when market was going up, it was consolidating and it was going up to fill this imbalance. These lows here are liquidity. Okay, now market now consolidated here, pull back up, and then broke structure again here. Started consolidating and be going down, giving us another liquidity zone above here. These tails, these weeks above here are just liquidity. As price is consolidating and going down, is keeping liquidity. Some people, as you can see, I kept my stop loss here. So some people are making entries and keeping their stop loss above these weeks around here. So when the market was forming liquidity and was going up, some people were keeping liquidity beneath here. as price was going up. Okay, so when they have already filled, when price filled this imbalance, they took profit and started looking for a short. When price change character, you will now start looking for short confirmation entries to make here. This is what I look at the 30 minutes. I look at where I will be keeping my SL and where the price is going. First of all, I look at what price is doing and where it is likely to go to. Now, this low right here that change character to fill this imbalance is where I'm keeping my take profit, because this is a liquidity, this is a demand zone, and also a liquidity, because it is not a strong low. It is not a low that can hold on to price and start moving up again. Rather, price will take that low, price will break and either go up or continue to go down. That is why I kept my take profit here. So 30 minutes is just to get the overall market structure on what I'm going to make either profit or loss for the day. Now, when I go down to the 5 minutes time frame, 5 minutes time frame just to look at entries. Where am I going to make an entry? Now, why is price consolidating like this? Let me tell you why. Price is consolidating like this because we have a demand zone here. Price sold, broke structure here, created a bullish, not an engulf, bullish engulf, but a bullish candlestick. Another block, if you can call this other block, yes, is another block. Now, this other block now is like let's say is the other block that's holding on to prices, trying to hold on to prices. Since this morning, this other block has been holding on to prices. So I entered my first entry was here when I saw that price wasn't strong enough to pull back, to bounce, to continue going up. That was when I made the first entry here. So 5 minutes is where am I keeping my entry? Where am I making my entry? And where am I keeping my SL? And I was like, my SL being here is kind of, when I first made this first entry, I was like, my SL being here, I wasn't really confident about it. I wanted to keep it here because market can come up, take this liquidity here and fall strongly. But it was ranging and it was falling. So till now, I'm not really, will I say, full of confidence that where my SL is okay, but I'm just managing my risks for the day. Now, my SL, my TP being here is my best. Why I say it's my best take profit position is because I want to make profit for today. And price is likely to tap on that. Price is likely to tap on this change of character. Is it like to sweep it? And then the body of the candlestick that swept this liquidity, when price take it, is what I'll not be looking for. We'll be looking at, because price can sweep liquidity this low, and then the body will now close inside that zone. It's just like a sweep. So I'm looking at how it will react. Will the body close fully, or will it be the wick that will close, that will sweep liquidity this low and then start moving up again? So all those things are what I'm considering when I started making my analysis today. Okay, so this video is long. It might reach, I don't even know how many gigs safe, but I will shorten it and send it for you so that you understand. Now, this is a liquidity high where people are keeping their SL. So this is a liquidity high. This is a liquidity high where people are likely to keep their SL. So market, after going down, market will still come up to take those liquidity, because I understand you don't understand what liquidity is. Liquidity at these highs, the market is ranging. There are different types of liquidity, as you can just research on different types of liquidity. Okay, so this is a liquidity high where market is likely. New York session, the 3 time zone is likely to push down strong and then push back up strongly to take out this liquidity. That's what New York 3 time zone does. Can go up strongly and take out this liquidity here. I don't just like trading on, like, having a position open during New York section, because they are likely to do any kind of annoying move. It's possible that they will take this low here, strongly move up here, take this liquidity here, and we're likely going to take this high here before continue to go down. That's why I don't like trading New York section sometimes. So, but likely the market is on my own side, so I'm grateful for that. Hope you understand everything that I've explained. If I go down to my 1 hour candlestick now, 1 hour candlestick is where I now look at for the final trading section. 1 hour is going to give me a very good insight where market is going. I'm sure this market is going to reach this demand zone. Why? Because market is going to reach this demand zone because there's liquidity here. This is the particular demand, the first demand zone, and then the daily. This is like, let us say here is the 1 hour demand zone here, and there's liquidity here, and then daily demand zone is here, where this line is. This zone, from this line here to this low here, this is my daily demand zone. From this line here to this low here, this is my daily demand zone, where market is likely to reach change character and continue to go up, because the overall market trend is bullish. As you can see, the market is now going strongly. Market have taken this low. If you go down to the 30 minutes, you see what I'm saying, or 15 minutes. Let's go to the 15 minutes. Market have taken this liquidity. This week here, market have taken the liquidity. You see, now it's either when it pushes, now it can give us a fair value gap or an imbalance for a retest again, either for a continuous sell or a change to go up. Anyone it will be. But I know that market is going to take out this liquidity right here before it can change and start going up or continue to go down. This is how I want to make profit for today and not for the next 3 days or next. Do you understand? So the daily time frame is just to look at the overall market and where price is currently. Okay. It's even possible on the daily, looking at the daily, that the market is going to, the price is going to reach here. It's possible that you reach here. It's possible that you just continue to go up. Anything is possible. But what you want to make your own possibility look like is your own profit today. What you're going to make today. If you're going to make profit today or loss today. So forget about what the trend line of the daily is telling you. What you'll be looking at is what the candlestick is showing. Where is the current price at? What is it doing? That's what you're supposed to be looking at. Okay? Hope you understand everything. This video is very long.